Hey everybody, today is November 21st, 2024, and today we're going to talk about the stock market and where I see the stock market headed for the month of December. Please pause the video and read disclaimer. Okay, so just a warning in advance, I am a little bit sick, so I might cough once in a while, so I do apologize for that. We'll try to get through this video quickly. Okay, so where we left off last time was around here, right? And I said that basically I'm very bullish on the market, especially with the Fed starting to cut rates. They started cutting rates a couple months ago, right? First with a 50 basis point and then now with a 25 basis point, right? So you can see, let's see, so the Fed fund rate has been on the decline. You see it's kind of curling down now. We were above 5% earlier this year, right? Now we're under 5%. So we'll talk more about the implications of this, but for the most part, the important thing is that the Fed is starting to cut rates, right? Now that they have inflation inflation a bit under control now. And so my thesis was that they were going to continue to cut rates and the stock market would continue to rise, right? But I also said that there were two things that was important. First is that we were going to see who was going to win the presidential election. I said Trump would be better in terms of being a Republican and being more pro-business, and also to extent pro, risk on assets like crypto or tech stocks, right? And putting more. He said he would put more tariffs on foreign companies, so pro-American businesses basically. The second thing the second thing I was looking for was also seeing inflation continue to trend downwards, right? So in this case, for inflation, we actually saw a bit of a peak upward, right? But it was aligned with expectations, so it wasn't that bad. And really, we've been in a downtrend since March, right? So having it peak up a little bit isn't really the worst thing in the world, and I think the market expects us to continue to cut rates. So we're gonna get their next CPI report on December 11th, and we'll see what the Fed does, right? The Fed wants to cut another 25 basis points. They already cut 50 and 25, and yeah, we'll see. But basically, when Trump won on November 5th, that basically sent the stock market up to new all-time highs, right? Because like I said, Trump, Republican, is more business friendly. So we basically, the first couple weeks, we basically saw the market go up and then kind of pull back. We started to fade the election rally, which isn't the worst thing in the world because we did, gap up a little bit, but it seems like we're defending this gap, which is usually a sign of strong, strong demand from the buyers to absorb any supply from sellers, right? And now we're starting to curl up and kind of fill this gap right here. So overall, this looks bullish. There's really nothing, like from a technical standpoint, yes, we did come down and touch this short-term moving average, 50-day moving average, but we gapped up and bounced up, right? So it shows that we still have a lot of strength moving forward, and our RSI is not overbought yet, right? And fundamentally, things are looking good with Trump as the president and as the Fed continues to cut rates, as we continue to see inflation, inflation trend downward, right? Minus this small but expected, move up higher. We definitely want to see it move closer to 2%, and from there, we should see the Fed continue to cut rates, right? And people are saying there might be more cut rates next year, probably 25 basis points, but we'll see how inflation, how the inflation report comes out going forward, right? Another thing that people haven't really been talking about is the yield curve has uninverted for a while now, since September, right? So stay uninverted, and this is something to think about. It's not like the biggest risk, but there's a lot of positive things to talk about, right? There's a lot of positive tailwinds that are pushing the market higher, right? That I just mentioned. But I do think it's important to look at the other side of the coin, right? What are some potential headwinds? And I want to talk about that because if you look at the bigger picture, right? Every time the Fed has cut rates, you can see that we've entered a recession, right? Now, it doesn't mean it's going to be like horrific or anything. Like it could be like a shallow recession, like we saw during COVID. But these great areas show that when the Fed starts cutting rates, that we generally do follow a recession in the upcoming months. Again, it doesn't have to be severe. In a lot of ways, a lot of people have said that we've been in sort of like this silent recession, right? Where there hasn't technically been a recession, but prices have gone up, the cost of living has gone up, and people have had to tighten their budget, right? Another thing to look at is the yield curve uninverting, right? Every time the yield curve uninverts, it tends to be followed, excuse me, by a recessionary period, right? All the way back in the 80s, right? You can see, and we stay uninverted for a while now, so we might see, excuse me, a And the last time we were this uninverted for this long was back in the 80s, right? When we came out the 70s stagflation, and basically this was before the huge bull run, but we kind of had to like raise interest rates to the point where it kind of took us out of this stagflationary economy, right? But we also saw, two recessions in the early 80s. So is that something that we're going to see? Nothing is guaranteed, but with a Republican pro-business president, we might see a delay in the recession. Of course, this is Trump's second term, so he's not going to be able to run again after 4 years. So it's possible that we might see a bit of a slowdown if the stars do align and we do follow history, and if history repeats itself, right? Excuse me. So let's look at higher time frames, right? Higher time frames still look good. Get a cleaner chart. As you can see, if we look at the longer term trend, this is something I talked about in the previous video, was that it is healthy to come back and retest these longer time frame moving averages, the 50, 100, and 200 week moving averages. The last time we tested it was back in 2023, and from there we sort of just rip in higher, right? As the anticipation of Fed cutting to actual Fed cutting, and now with the Republican Donald Trump as president, the next president, he's technically the president-elect, things are looking really good, look really gravy for at least the next 12 months, right? So 2025 is definitely setting up to be a very spectacular year. Looking at the VIX, this was the Japan carry trade unwinding, where we hit an intraday high of over 60 VIX, but it does seem like it's cooling off a little bit, right? And just a reminder, in 2017, when Trump's first year as president, we saw not record, but we saw low volatility, volatility as low as we haven't seen in many years, right? Since 2006. So if Trump's first year as president, are we going to see this come down lower? If that is the case, then that should give the stock market more juice to push up higher, right? Just something that I just remembered from trading in 2017. The dollar, of course, ripped up higher, right? Which sort of seems contradictory because the stock and the dollar are usually inversely correlated, meaning that when the dollar goes down, that usually when the dollar is weaker, that usually means that people are rotating to stocks and vice versa. But when Trump became president, we saw a huge rip. When he was elected as president-elect, right? We saw a huge rip in the dollar and also the stock market. So it's a bit strange. It's not very common that you see them both rising at the same time, right, or falling at the same time. But it does make you wonder, like, we're getting to that overbought territory. This is a weekly chart. The RSI is getting overbought, right? The daily is sort of like straddling the overbought territory, and the monthly is still in a neutral, but looking like it's about to launch up higher, right? But just look at the weekly, right? We've had multiple weeks in a row where it's gone up after tagging the 200-week moving average. So it just makes me wonder if this thing's going to come down, especially for the next couple months before finding a bottom. That could be really bullish for December, right? If we do have a pullback in the dollar, right, that might give the stock market more juice to push up higher, right? Especially as people anticipate Trump and what a presidency means for business, for the stock market, right? And he's currently appointing members of his cabinet, so the stock market is also reacting to that as well. But overall, I would say I expect December to, again, continue this trend, excuse me, higher. And I personally would like to see us kind of, like, I think this growth rate is pretty good, right? See, notice how the market is coming down and retesting these moving averages, right? So the bands aren't too wide apart. They're fairly close together, and that's usually a good thing. That's a healthy uptrend, right? Because when the stock market rips up too high too quickly, the bands start to widen, and we tend to be followed by a severe correction. So what I think was going to happen is I think the market was going to continue to digest Trump's presidential win, and also the cabinets that he's appointing. And that's going to kind of, like, people are going to digest that and see what the implications are for the next year, right? And also another thing is to look at inflation. We definitely want to see inflation get closer to 2%, right? And we also want to see if the Fed is going to cut, right? A lot of people believe that the Fed might cut another 25 basis point, right? If the inflation rate comes down. So overall, I'm still bullish next year for sure. December, probably going to push up higher, if not consolidate first for a while. But yeah, there's that talk of the Santa Claus rally, right, in December. So I just think that overall general market sentiment is positive, and I really see no major headwind, right? Just a lot of tailwinds. Again, just to reiterate, when the Fed starts cutting, we tend to be followed by a recession, but that doesn't necessarily mean it's going to happen right away. That could be delayed, right? Especially because we have been sort of in a silent recession, and also because Trump is going to enter as president. And the first year of the presidency is usually pretty good, right? Biden's first year, Trump's first year in 2017. So I do expect a pretty good 2025, if not a positive December to end of the year off, which is a really good year overall for the markets. Again, the yield curve uninverting, something to pay attention to. Doesn't necessarily mean that recession is going to happen right away, but it's still something to pay attention to, right? As people continue to pile into the market that seems to keep going up, right? Since the 2022 correction low, right? So again, December, I'm expecting to be positive just like 2025, and we'll come back and we'll see what the next inflation update is and whether the Fed is planning to lower rates again. Thank you for watching this video. If you found it helpful, useful, and informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.